Hello, everybody. Welcome to the third episode of Sunday Futures. We are back 3 weeks in a row on a beautiful Sunday. Hope everyone's doing well. Let me know what you guys did yesterday over the weekend on Saturday. It was a fun Saturday for me, quite frankly, because I did nothing. And when I mean nothing, I legit did nothing. It was just, you know what happened on Saturday? I woke up and I was emotionally exhausted from what happened on Friday. And we're going to talk about that. That'll be our first subject for the day. We're going to be talking about Palantir's price action and its ability to maintain this $30 level going into this week. We got to look at a lot of charts, especially a lot of charts containing information from the sell-off we had when the VIX spiked to the highest level we've seen in 4 years on Monday. Geopolitical concerns along with Iran and Israel hurting the macro economy right now, along with that really messing over Bitcoin. And then overall where we think the market's going to go for the rest of this week. But I woke up on Saturday and I was just like, wow, it felt like Friday night was it was just a lot, dude, the entire day. I was streaming live the whole day. We did like 3 shows on Friday, so it was like 7-8 hours of streaming. But the emotions of the price action and the entire community coming together to see the historic moment of $30, which was very, very cool to see. Webull is showing that we closed after hours at $29.99, but on Robinhood it's showing that we closed at $30.01. Some people might have different closing prices, but closed above 30 for the first time in 3 years. So it was just really emotional. A lot of shit happened. I woke up on Saturday. I was just like, dude, I felt like I lived a year in one day because there was so much stuff to go through. So yeah, I did nothing on Saturday. I caught up on Prison Break. I finished season 2. Now season 3 is kind of like trash. It's like, in the first 2 seasons of a show are good, and the next season you're like, all right, whatever. It's hard for a show to have really good seasons other than Dawson's Creek. Dawson's Creek has, phenomenal seasons every season. Now I'm just lying. Season 5 was not good. Season 6 also sucked. But the first 3 seasons of Dawson Creek, incredible. But yeah, that's all I did yesterday. That's all I did. And then today I had a bunch of meetings, and now we're here live on the show. Thank you, everybody, for being here. Did you watch any Olympic Games? No, but I saw Chef Curry hit 4 threes in a row to end out the USA basketball gold medal. So that was awesome. And that was super exciting. Crossroads, Adam, what's up? What's up? Richard, June. Keelam says, damn, you look good. I appreciate it. Thank you for the compliment. Working out back at the gym. Daniel says, I'll give him a pass for being late. I'm thankful he's doing a stream on his birthday. Always streaming on my birthday. Never not streaming on my birthday. Rolando says, I love Dawson Creek. Thank you, Rolando. The first person ever in the chat to finally agree that Dawson Creek is a good show. So I appreciate it. Shout out to Matt Money as well. As June says right here, they did a interview with the CEO of Rocket Lab. So definitely make sure to check out his channel or Vince's channel to get parts of that interview. Really exciting stuff. Rocket Lab CEO obviously realizing, hey, maybe it's time we talk to the retail community, and Matt and Vince kind of leading that charge. So awesome stuff. All right. So let's start off with the first topic of the day, which is Palantir as we get into the show. Yeah, I think, I'm curious to hear what your perspective is in the chat. We'll spend a good 10 minutes on Palantir, and then we'll move on to some macro stuff. Do you think we hold 30? Because that's really the question of this segment. We talked about ad nauseum on Sunday why we thought it got to 30. Palantir Weekly, we dissected and went through all the growth numbers, etc. It seems obvious that the market is starting to recognize that Palantir might be the only true AI play when it comes to software. That's starting to reaccelerate growth. And the reacceleration of that growth is what's very exciting. Now, it makes the comps a lot tougher, right? Next year, they're going to have to grow not from 533 million like they had last quarter, but from 678 million that they had this quarter, right? So next year, they're going to have to grow 30% above that. So the street, and that's what's being priced in for the growth, right? The street's really looking at a premium based on massive growth, and I am starting to get more comfortable at believing that Palantir has figured out a go-to-market strategy that is going to sustain that growth. Now, why do I bring that up? I bring that up to say, I only think 30 goes away for 2 reasons. Number one, macro uncertainties, which obviously futures are red right now. They're not that red, but they're red. So like, I think if the market flips green tomorrow morning, it wouldn't be that crazy, but there's some geopolitical stuff going on. Iran said Israeli intelligence said, hey, we definitely think they're going to attack tonight. So that stuff's spooking Bitcoin. There's some stuff going on with Ukraine and a nuclear reactor. So lots of different things are happening that could obviously affect growth stocks like Palantir. And so macro could take it down below 30. That's very, very possible. The other reason it goes down below 30 is just because people aren't willing to pay this expensive of a premium without more further indication of growth. And I think Q3, they're guiding for $701 million. That'll be 25% year-over-year growth, down from 27% last quarter. But last quarter, they guided for 22%. They came in at 27%. If they go another 5% ahead of their guidance, they're going to be at 30% growth in Q3, which is going to be in November, which I think is going to be very exciting, because if we get a rate cut before then, like, the market's really going to start thinking, all right, Palantir is the real deal. And then if that compounds, and we're going to talk a little bit more about the compounding media attention on Palantir, I think it can get exciting. So what do you guys think? Do we hold 30 or not? Alexander says we get 25 before 35. I think that's very possible as well. I think the range probably is 27 to 32 now. I do think tomorrow we can crack 31, 32 if momentum is there, because now momentum's real, right? Like, momentum's actually there. And if momentum's there, you're going to get a lot of new time investors, maybe even fund managers that are like, hey, let's, $30 a share is expensive to all the Palantir OGs, because we know trading at 27 times price to sales and almost $70 billion market cap is a lot, given, the current trajectory of the company. So pretty much all of us agree, like, yeah, it's a bit expensive right here. But some people might, $30 is just $30. $30 is not $150 like some of these other it's definitely not, $400 like Microsoft. So if you just blindly think, okay, AI, tech, innovation, $30, I'll buy 1 million shares, right? If you're some fund, you could easily see that momentum compound on each other, and then the thing just keeps going higher, right? Now, it'll get to a point where it could get ridiculous, but it could also level out, and you get a lot of sell side pressure from people at 32, 33. So I think 27 to 32 is the range. Could we go beyond that? Sure. Could we go below that? Yes. But it's going to be exciting to see how it plays out. Crossroad says 31 or 30. I think we'll need some higher consolidation before we break 30 for good. I agree. A lot of people are saying 32, 33. Alex says we're holding 30. Microsoft and Wendy's announcements this week solidifies this range. I do think the partnerships were very exciting. We'll talk about Robinhood in a bit as well, but I think those partnerships were real, and I think the Microsoft partnership really got a lot of fund managers excited, because that partnership wasn't a joke. I mean, that was a real, legit government partnership around operationalizing LLMs, which is the whole thesis around making AI valuable. I don't know, dude. It gets really fun when you get the big names. Star Buccaneer says, wouldn't it be crazy if $29.99 is the base? That would be crazy. That'd be funny, dude. Like, literally $29.99 was blue balling us for an hour. Dude, we stayed live for an hour. I don't know put in the chat if you were there on the market open on Friday, because it was hilarious, dude. Like, I told like 7 different stories throughout the course of $29.99 going until 30. I just had more stuff to talk about while we were waiting. So this guy in the chat, Chris CRM, friend of the channel, he said, never thought I'd be sitting here not doing work watching a stock on the minute chart try to achieve 30. So literally people from their like real lives were taking a break to watch this sucker hit 30. Then Melanie, I don't know if she's here, Melanie came in and said, I just joined. How long have you been staring at the screen willing for $30? And I was like, someone tell Melanie this is a lifestyle, okay? This is an absolute lifestyle. And then we finally had the pictures. There we had 30. Someone caught me holding my heart at $30. That was hilarious. It was just so cool, dude. It was just so cool. I was super happy. Myra posted this screenshot. Like, it was dope, dude. It was really dope, but it was emotional too. So I hope $29.99 does not become the new base, because then every day I'm going to be streaming to try to see if it hits 30 again. And it's just going to be 5-hour streams every single day. Amit, did you take a photo of your screen? Yeah, I posted it on Twitter. I posted at $30.19. So I didn't get 30 exactly, but $30.19 is when I posted it. If there is no serious geopolitical issue, and I hope inflation is coming down, so 1/2 big deals per week will keep it above 30 for sure. Well, I think we get CPI this week. Let me check exactly. CPI. I think we get CPI on, August 14th. Oh boy. Wednesday. Oh boy. Wednesday. I think we're coming in at 2.8. I think it's going to be below 2, and I think markets might rally off that, dude, which is going to be exciting. But maybe markets don't rally. Maybe they just hold tight at these levels. But we will see. So CPI this week will also be very, very important as well. Mitt, I've been watching your channel a few months now. That was the best market open ever. By far, love your stories and when you are opening your liquor store, so we can all support you. I appreciate that. Thank you so much. Yeah, it was fun, dude. It was one of those moments where everyone came together and just got to like experience something, And again, I just think it's very special. There's not a lot of communities that get to go on a journey together. There's now at this point tens of thousands of people actively on a journey to see this company's trajectory. It really reminds me of Tesla. Now for Tesla, there's millions of people, right? But early days, I think when Palantir's, 250, 300 a share, it's going to be literally millions of people following this journey. And it's going to be exciting, dude. Karp's releasing a book in February 2025. Like, the content is not going to stop in terms of how the company is portraying themselves, which actually should segue into my next point on Palantir. So I'll do this last 5 on Palantir, and then we'll get more into some of the macro stuff. But I wrote up this tweet over the weekend. I might do a video on it in and of itself. But I had this thought about the compounding media effects of Palantir. And the compounding media effects of Palantir are getting me pretty excited. So to break this down, I'm not going to read the whole tweet because it's like a Bill Ackman essay. I don't know why I keep writing the Bill Ackman essays, but like, dude, I hate writing, by the way. I don't like writing. But like, when it's time to make a tweet, I'll just sit there and I'll just like type, and it feels weird. It feels easier typing than like typing a tweet than like typing a whole essay or something. But CNBC, Bloomberg, Yahoo Finance, and the Wall Street Journal. These are 4 media conglomerates that control the majority of attention in finance media. Now, their attention is starting to decrease due to the rise of alternative media, like people like myself, YouTube, finance people, all that stuff. But in general, those companies have billions of dollars backing them. Their parent companies, Comcast, etc., control a lot of the financing, and so they have the ability to get massive distribution globally. So, I mean, if you're a CEO and you go on one of those channels, whether it's through an article, radio, video, you're going to get 100,000 people on average to like consume your content. Now, again, that influence is going down, but it's not like the news, like mainstream news, that's influence is going down, because finance news is very niche in particular. And like, you need networks that are dedicated to that stuff. Whereas, CNN and Fox, there's so many alternative political pundits that you don't necessarily need to just watch those mainstream talking heads. So as a result of that, the media conglomerates are real. It is my belief that the media companies are starting to recognize the value of Palantir in terms of aggregating attention. So what are the media businesses contingent upon? Getting clicks and getting attention. At the end of the day, you need people to consume your content in order to advertise against it. That's how the media business works. They care about ratings, and they care about what people get them the most ratings. Why is Tom Lee on CNBC all the time? He gets ratings. Why is Kathy Wood and Dan Ives on CNBC all the time? They get ratings. CNBC is nothing without these kind of figures that are talking on their channels to provide the attention that is interesting enough for people to tune in. So I think Tesla is the best example. A couple of years ago, really around like 2019, the media companies realized that Tesla was a money machine in terms of generating attention. Now, their relationship with Tesla has always been a bit negative, because Elon really said, screw the oil companies, screw the legacy car companies, and the legacy car companies and the oil companies advertised against the media companies. So they never had the best relationship, but they still covered them. And the rise of independent media creators around Tesla kind of countered the mainstream narrative, which amalgamated even more attention. With Palantir, they used to have a negative relationship with Palantir when it comes to the media. It was a black box company. Trump made them the most evil company in the world with Peter Thiel and all that stuff. But now I think the media is starting to recognize, wait a second, Palantir is just a super cool AI play. And if Palantir is a super cool AI play, and people care about AI, people care about Western values, people care about a lot of these, new things that are becoming mainstream, then maybe we should start talking about them more. And so I believe what's going to happen, my prediction over the next couple of years, is that there's going to be a proliferation of more and more media attention on Palantir. What does that mean for investors? What that means is you got to sit back and enjoy the ride, because there are going to be so many networks covering this company. And as a result of those networks covering this company, it's going to create, whether it's good or bad, more people interested in the stock. Now, that might attract more shorts, right? By the way, the short interest is the lowest it's ever been. It went to 3%. I got the update yesterday. There's like 30 million shares shorted of Palantir. Like it's like the shorts are not messing with Palantir anymore. But you're going to get more media attention. And when you get more media attention, you're going to get more people that are at least interested in the stock. And if you get more people that are interested in the stock, you're going to get a certain amount of people that just start buying the stock because they start seeing it everywhere. And that is what I think is going to deeply benefit long-term investors that are in this, because when the media is on your side, and again, the media can turn against you or they can be on your side, very quickly. But if they're on your side, it's going to be very good for Palantir. Let's take an example of this. Joe Lonsdale was on CNBC. He got 21,000 views. He doesn't even work at Palantir anymore. But because they put Palantir co-founder in the title, you had a bunch of people that were interested in what the Palantir co-founder, Joe Lonsdale, had to say about, in this video titled Big Tech. So, I mean, that 21,000 views is like orders of magnitude higher than the average CNBC video. The CNBC analytics people are looking at that and they're like, hey, we should get more Palantir coverage, right? We should get more people talking about Palantir. We should get more people talking about the ontology. We should see if we can get Carp again. Like, I really do think over the next couple of years, you're going to see Palantir talked about on mainstream networks at least every week, if not every day, especially if the growth is there. I mean, if this sucker goes to $50 a share, like, then you're really going to see the proliferation of media get exciting. And I think that's going to be massive for Palantir. And I also think that's going to be really strong for the broader influence of the company. Robinhood's 24-hour markets, I don't think is working today, guys. They said Robinhood said it's probably not going to be available until August 16th. Let me make sure. Yes, it's not working. So August 16th, we have 5 days to wait. If anything, that just shows you Robinhood's influence is so important, right? Because like, we all want to see what the overnight trading is. But yeah, August 16th, their third-party provider is going to be able to get it back online. And so we'll see it then. So that is my perspective in the context of Palantir. Now, one way to contextualize this is my YouTube channel. The way my YouTube channel grew was in November of 2021, when I first started talking about Palantir, I realized there was a fundamental imbalance of supply and demand. And this is true for any type of business. When you realize you have the supply that can be adequate enough for the demand, whether you're selling cupcakes or whether you're making Palantir content, you have a potential business and you have the ability to potentially grow. So there was a ton of demand on YouTube just through search volumes for Palantir, and there was little to no supply. I mean, there were a couple channels talking here and there. Many of them weren't consistent. Many of them, and I wasn't perfect by any means in 2021 or 2022, but I was at least trying. And I had enough communication skills to try to break down the Truff-Agora partnership in May of 2022 that I really didn't understand, but I was the only one who was doing it. So when you have all that demand and it's this ocean and you're the only fish in the ocean, well, you're going to get all the water. And so I got all the attention, and that's how I was able to sort of have a monopoly essentially on Palantir content, because no one else was really making a lot of content at the time in that same niche. Now that's changed. Now I'm not alone. Now there's a lot of other people. Now there's a lot of other creators on Twitter that are starting Palantir accounts. Now there's other YouTubers that are realizing, hey, we can talk about Palantir and we can generate attention. I think a lot of them are not like that good at it. I've seen some of their videos. Like I'm happy when more people talk about Palantir. I try to, watch them and I'm like, okay, this person really doesn't understand the company, but whatever. But the point is, there's going to be a lot of more people entering this race. And that's only good for the stock, because more and more people talking about the stock, and the ones that really don't understand anything, it'll be filtered through. But more and more people just means more and more attention. More and more attention means more media compounding, and that just means more people get to buy the stock. And if the growth can match the media attention as well, everything changes. I think every single thing changes. So it's going to be really exciting. And overall, I think that we can hold the 30s. I think at least we can hold 30 till the end of the year. 35 is now my new price target by the end of the year, especially if we get a rate cut, Santa Claus rally. I mean, dare I say 40? Now, 40 is going to be hard, dude. I don't want to be super crazy and say 40, because I think the growth is going to have to really reflect 40. But I think 35 is not insane. At least 30 would be awesome for the end of the year. Jason says, glad to have found such an amazing community. That's the other thing. More people join the community. More people get excited to know about all the people in the community. More people are, find sort of a home that they can relate to. I think that's another thing that compounds the Palantir media effect, which is going to be very important. June says, Amid, are you going to go into cupcake making? I've always wanted to start a bakery. I talked last week about how I want to start a liquor store. I wouldn't mind starting a bakery, dude. Dude, a bakery would be pretty cool. Brownies, cupcakes. I would love that stuff, dude. I would legit love to start a cupcake store. So when Palantir gets to $300-400, we'll sell a little bit and we'll start a new bakery. $40 is a $90 billion market cap. Yes. Which is going to be hard to justify doing $2.8 billion in revenue. So I don't want to sound insane. Even right now, we're at call it $70 billion market cap, doing $2.7 billion in revenue. It's tough, dude. I would say it's expensive, but I agree with Amir. He had a good article today on Seeking Alpha. It's expensive, but it's not overvalued. So that's my take. But make no mistake about it, it is expensive. It is the objectively most expensive name in software, I think, for a reason. And I think all of us know what that reason is. There's a really, unique premium attached to it. There's a reason this community exists. There's a reason that premium is attached to Palantir. There's something esoteric and exciting about the company, and that's why people continue to buy it. But the growth's going to have to match up to justify the valuations if they keep staying at these levels. Cupcakes that get you drunk is, I see that what your idea is. Yeah, we need to start a liquor store that has a bakery inside of it. That is That's what we need to do. FOMO, yes. I mean, look, the only way we get to 40 as well, unless we have just like an NVIDIA quarter, is FOMO. And I think tomorrow morning the FOMO is going to be there, dude. I think tomorrow morning the FOMO is going to be there. We'll see how the market reacts to it, but I do think tomorrow we have a chance to hold 30 because people are now 30 is a big psychological difference, dude. It's like if SoFi got over $10, like now you get people like, oh, like it's not in the single digits anymore. We can finally get excited about it. So I think 30 is a big deal, and let's just see tomorrow if it holds up. Amit, what do you expect to be the big next massive catalyst for growth? I think it's just expanding AIP. I think so. This is the last thing I'll say on Palantir, then we'll move on. I think the ontology is starting to become obvious that you need it to operationalize LLMs. Microsoft has proven that. Wendy's has proven that. All these companies are proving that. So if they can get more and more companies through these boot camps to realize that's the case, and again, we saw on the slide on their deck they put out, they are closing 7-figure deals in 7 days. I mean, it's just kind of ridiculous, right? That doesn't happen in software. You don't close a 7-figure deal in 7 days. It's becoming evident that if they keep doing that over and over and over and over and over again, they're just going to grow like crazy. Like that is how I'm thinking of the growth story. Like with NVIDIA, the GPU revolution, made everyone realize they need to train their models. Therefore, data center revenues exploded. For Palantir, I think if all these models need to be operationalized, I mean, there needs to be value from them within the enterprise. Then you've got Palantir as one of the key beneficiaries of that. And then along with that, they have new products, right? Warp Speed, we'll get more information on that. But I think they're not done innovating. I think every 18 months, they're going to come out with a new product, and that will be a catalyst for growth as well. So that's what we got on Palantir. And those are my thoughts going into tomorrow, and we'll see what happens. Robinhood overnight, it says it's working, but you can't really trade anything. Like there's no volume on any stocks. Yeah, like look, here's GameStop. If you go to the overnight volume, you see how it says 0. So it looks like it's working, but there's no volume. They did say it'll take till Thursday to fix it, which just shows you how important it is, dude. Like this is the only place people can go to get to like some updates on stocks. And it's way better than futures because it's like real trading, right? Or like real trading of individual names. So yeah, on Thursday, we'll see overnight markets come back. Okay, cool. So that was the update on Robinhood. On Palantir, let's quickly talk about Robinhood, and then we'll move on to some more macro stuff because I have a lot of charts I want to show indicating if the bottom for the SPY is in. So I don't know if people saw this, but I tweeted this over the weekend. I found out that Robinhood had a lot of money deposited in the last week. So let's just listen to this clip and then we'll go from there.
And in that earnings call, we talked about July volumes being 20% higher than June, which was the last month of the last quarter. And August has been more of the same. And August is typically a pretty quiet month for retail trading activity. And we haven't seen that this year. We've had $1 billion in net deposits in the first week of August. And the $13 billion we had in Q2 was a record high for us. Just Monday of this week, was about $500 million of net deposits into the platform in one day. And
bro, when he said that, this was Friday night. I was just like trying to see if Vlad did any interviews on earnings. I saw that. I like legit like dropped my jaw. I was like, they didn't say that they just said they had 1 billion of deposits on August in the earnings call. They did not say on Monday alone they had $500 million. Like that doesn't happen, dude. $500 million in a day. Now, why did that happen? The VIX spiked. And instead of retail, like Robinhood did say on the earnings call, retail's buying the dip. And no one really believed them, because everyone thinks retail is dumb money. If retail put in $500 million in one day, it's because they bought the fucking dip. I know I bought the dip on Monday. I know a lot of people in the chat bought the dip on Monday. Like you should have seen net deposits leave on Monday. You should have seen withdrawals. You should have seen selling. You should have seen a ton of stuff. At least on Robinhood, if they're saying $500 million came in a day, that means a lot of people bought the dip. So why is that significant? I think it's significant for a variety of reasons, but the number one thing is that Q3 for Robinhood historically does not go the best because you have two of the worst months inside of the quarter, August and September. July, they said volumes were 20% higher than June. I did the math on that. They are going to print almost $200 million on option contracts, which is their highest take rate, and maybe even 60 million, 50 million on equities, which usually they do 30, 40 million, if those levels sustain themselves. Now they're saying in August, we're seeing more of the same that we saw in July. So if August and July are 20% higher than June, then September just has to be kind of mediocre, right? September usually sucks. If September is just like mediocre, but this year, we're going to get a rate cut in September. So if we get a rate cut in September, September might be through the roof as well. So the quarter that's supposed to be the weakest for Robinhood looks like it's about to be one of the strongest. And then the net deposits that are going into the platform to me is saying, oh, like people are really trusting Robinhood with their money. The fact that in July they had over $4 billion of deposits, I was actually really worried about July because I was like, hey, they stopped the 1% transfer brokerage system. So if they're not doing the transfer brokerage, the like 1% transfer match, then boom, people are not going to deposit as much because the narrative from the bears was like, oh, Robinhood's only getting this money because they're giving out free money. July was the first month of the year. They brought in over 4 billion of deposits and they didn't give any free money. There was no like 1%, like bring over your Schwab Fidelity account. And then August seems like it's going to be the same. So my overall thoughts on Robinhood right now, or I think it's one of the easiest stocks to buy at $17.85 or $17. I think it might go to $16 tomorrow because Bitcoin is tanking. And because Robinhood is pegged to Bitcoin, I think Bitcoin, which currently is at 58,000, if it doesn't recover by the morning, Robinhood might see below 17. It is like the risk reward on this is absolutely magnificent. The only way this thesis goes wrong by the end of the year, long term, I think the thesis is fine. But if you're thinking about till the end of the year, till January, till February, is if we have a recession. And if we have a pretty bad bear market and, the S&P goes back to 500, below 500, et cetera. If that's the case, then yeah, things will get tough. I don't think Robinhood will literally collapse, but I think it'll be stuck between 14 and 16 and not break out back to 25 like it did a couple weeks ago or 24.50. But overall, I bought more on Friday. Like I think this growth is unbelievable. And I think Vlad is going to just keep it up. And it's going to be exciting to see how it goes. So that's the update on Robinhood, and we'll see. We'll see what happens. But these numbers are becoming undeniable at this point. And it's getting exciting, dude, because if they keep up these numbers, this is what I'm noticing about Palantir as well. Things don't deaccelerate when you're on an S curve. Like they only go further if you can keep executing. So you have to keep executing, but it gets easier to execute when you have millions and millions of users that keep using your product and they only get more engaged with it. And then in October, they have this massive event. There's going to be a massive fucking event. It's going to be bigger than the Robinhood Gold event. They're going to introduce a ton of new products, futures trading, index options, their new web trading platform, the new user interface for the iPhone and Android. Like, I don't think the momentum's stopping. We just need to hope we don't get into a bear market. And so those are my thoughts on Robinhood. Okay, so let's talk about macro. Let's now talk about macro. So let's do a poll in the chat. Let's do a poll in the chat on if you guys think the bottom is in for the S&P. Let's do that. I think that's an appropriate poll to do right now and see what people are thinking. I have an opinion, but I'm curious what people have to say. So here is the poll. Is the S&P bottom in? Just a yes or no. I personally think short term, I think the bottom's in at 507 on the S&P. I don't think we're testing 507 again unless we have a more dramatic downturn by some black swan event. However, if a variety of things go wrong in September, like we don't get the rate cut, or we get jobs data that's really bad and the rate cut is cutting into weakness, or the presidency is won by someone that the market really did not want to win the presidency, or Iran-Israel gets really intense based on some of the data we got over the past couple of hours. Like, I think all of these things can bring us right back to that 507 level. I just think the VIX is not spiking to levels we haven't seen in 4 years. And if the VIX isn't going to spike to levels we haven't seen in 4 years, I don't think the positive or the inverse correlation with the S&P bottoming when the VIX spikes is going to happen again. Like, for that phenomena to happen again, it's going to take a really serious event happening. And given the Japan yen carry trade has started to unwind, I kind of feel like we're in the clear when it comes to like a major black swan event. And I'm going to show some data to kind of prove that. Okay, so 54% say no. Wow. 54% say no. So 54% of you think the bottom is not in, and we still have some more pain to go. Dan Niles, popular analyst, he believes the bottom's coming in September, which means if we bottom in September, I don't know if Palantir holds 30. I don't know if Robinhood holds 17. Like, that means we're going to get even bigger discounts going into September if that happens again. But I kind of don't think that's necessarily going to happen. Do you think the market is pricing in 25 or 50 basis points? I think the market is pricing in, well, I don't think they're pricing in 50, but they think 50 is going to happen based on that jobs report we got 2 weeks ago. However, because markets have recovered and because we got better jobs data on Friday with the jobless claims, I think 25 is what's likely going to happen. But I think the market would get a little upset if it's not 50. Not upset to the point where they would tank stocks, but they want to see J. Powell finally like make a decision and begin the rate cutting process. Remember, in December, 2023, the reason we reversed on the market and we started this bull run is because Jay Powell said we're going to cut rates 3 times. And then remember, before March, people thought we would have 6 rate cuts. We have not had a single rate cut yet. And inflation was really sticky for the first 4 months, and now it's starting to come back down. But I think the market wants to see at least 2 cuts. All right, so here is the first chart I'm going to go through. Hedge funds reduced their bearish Japanese yen bets by the 5th largest amount in history on August 6th, which was one day after August 5th in terms of the collapse. So for really decades, traders, hedge funds have been using this yen carry trade to fund their operations in the United States, going short the yen, long U.S. equities. And it's worked for a long time until Japan decided they want to raise rates. Again, the reason they wanted to raise rates most likely was more out of a political concern versus out of a way to increase growth in their country, which, like, literally increasing rates is the opposite of increasing growth. But also because their debt to GDP ratio was not going to go down if the yen was stronger. So I don't know how the Japan situation plays out over the next decade. I think maybe it can be a very messy and ugly situation, but I think over the next 6 months, the carry yen trade has seemed to unwind. Again, this chart right here showing that hedge funds have deleveraged the most that they have in history on the week ending August 6th. As a result, I don't think that Japan is that big of an issue anymore. But obviously I could be wrong on that. And, we're going to have to end up seeing how it plays out. I just think if most funds are starting to get delevered, and if USD over JPY is starting to stabilize, right here, we're at 146. We got to 141 the day we had the Monday crash. By the way, what do we call the Monday crash? Because it's not like Black Monday. It's not like, can someone come up with an interesting name for us to call the August 5th Monday crash? What do we call it? So we got to a low of 141, right, on August 5th. And then since then, we've recovered. As you can see right here, 6 months ago, we were at, or not even 6 months ago, July 10th, dude. Forget 6 months ago. July 10th, we were at 161. So, like, this was the top of the market, right? This was when massive hedge funds were leveraging. They were borrowing so much against the yen. And then shit just unwound and unwound and unwound and unwound. And then boom, you bottom right here. Palantir goes to 20, Robinhood goes to 13, S&P goes to 507, and NASDAQ goes to 420. And then we have a little bit of recovery. Here's another fun thing to look at. I mean, dude, if you just look at the S&P from Ileana just tweeted about me, dude. This guy, I log on Twitter. This is the first thing I see. This is hilarious. Sorry, did I tune into the Sunday's Future Show or the Gun Show? I know you're back in the gym a bit, but no need to show up. Ileana's funny. So this is what happened on. Look at the S&P, dude. It's flat. It's fucking flat. It's legit flat, bro. You would think you could have woke up. You could have woke up and, like, been in the Mediterranean or in Italy or Greece or wherever people go for the summer and had a vacation, not looked at your portfolio for a week, which I don't know if I'm ever going to be able to go the rest of my life not having a look at my portfolio at least once a week. And you would have thought nothing happened. You would have thought there was no carry yen trade. You would have thought there was no unwinding. You'd have been like, oh, Palantir hit 30. That's cool, but it's been a boring week. And so I don't think Japan is coming back and is going to be, like, super aggressive with this, because Japan also probably got a phone call from some, people are saying, like, the American politicians called Japan. I think some multinational corporate CEOs gave a phone call to whoever runs the Bank of Japan, and they said, cut this shit out, bro. Like cut this shit out. And that's when Japan finally said, all right, we're not going to raise rates. So I think they were tapped, and they decided to do the right thing. So I don't think the unwind of the carry yen trade is going to be as bad, and that hopefully should be bullish for markets. Splash crash, is that what we're going to name it? Flash crash, manic Monday, unwind crash, miserable Monday. We got to get a good name, dude, because I don't even know what to call Monday at this point. That Monday, it was hilarious, dude. The VIX. The short-lived VIX, whatever it was, like, it was just a crazy Monday, but it made things absurd. David, thank you for the $70 super chat. Okay, I don't think this question is about the stock market, but let's read it anyway. Thank you, David, for the super chat. You don't have to send that much money, but thank you so much. Do you think it's possible that aliens are not actually extraterrestrials? They are actually demons from another dimension. We should not be trying to contact them, and that is why more people from the oculate have made contact with them. Okay, so real quick, the alien stuff, I have never been super interested in the alien stuff. The alien stuff has always been cool, but it's never been something that like has intrigued me per se. I know a lot of people can go down conspiracy theories like going into aliens and like, you know, are aliens real or not? I've just never cared. Now, I love Interstellar, I love space, sci-fi movies, all this stuff. I don't have a massive, you know, unique opinion, or I was trying to say take on aliens. So I don't know. Is it possible that aliens are not actually terrestrials? They are demons from another dimension? Maybe. Are we living in multiple dimensions? Maybe. Oculate. What is the oculate? I don't even know what that is. Oculate. OCCULT. OCCULT. I don't know what that is. Oh, a cult. Oh, you guys heard that? Oh, that's how you say it? I thought it was oculate. Hold on.
A cult.
Wait, am I the only one who said oculate? Am I the only one who said oculate? Is it a cult? What is this word mean? A cult? Does it just mean like CULT, like a regular cult? Hold on. Oh, supernatural, mystical, or magical beliefs, a phenomena of or involving something supernatural. Okay, dude, I thought it was fucking oculate. Like, sue me. I thought it was oculate, okay? I thought it was fucking oculate. Like, you guys know words are not my strong strength. Strong strength. That doesn't even make any fucking sense. You guys know this is not what I do. I don't do words, okay?
A cult.
I thought it was oculate. I thought it was oculate, bro. So anyway, I don't have an opinion on aliens, but for those that do, I don't have any malice against it. I just never got super excited about aliens. Definitely not about oculates. You see, you guys think sometimes I'm trolling when I say words. Like, I'm not trolling. There are certain words I just don't know how to say. Oculate was one of those. Now I know it's a cult. I thought it was oculate. It is what it is. It is what it is. All right, so let's move on from aliens. So we looked at the Japanese carry-in trade. Now here's some other charts I want to show about what's going on in the market. So look at this chart. I mean, this chart is pretty interesting right here. 2024 looks a lot like 2023. Okay, so if you look at 2024 S&P 500, green is 2024, orange is 2023. Almost exactly, they're lining up. Almost exactly. August, remember in July of 2023, we topped out at like 460, and then we bottomed all the way in October at 401 on the S&P. I remember that because I was up 30 grand on my SoFi options, and that like disappeared very quickly. So that was not fun. But it's happening again almost. It's happening again. You're seeing July and August go all the way down. And then if history is any indication, we are going to recover and then slowly fall down. And then end of December, it's just going to like take off going into the end of the year. So it'll be really interesting to see how it plays out. But 2024 already is starting to begin and look like what we're seeing in 2023. Now, here's another chart. Last week, we were promised a crash and a recession. It started off with the worst day since September 2022. Then Thursday saw the best day since November 2022. Thursday, the S&P was up 2.5%, the best day in 2 years. In the end, stocks finished exactly flat. My takeaway from this worst day, best day within the same week, which happened last week, is that the market wants to buy equities. The market is not really scared to buy equities. The market is just a little hesitant on certain things happening, but a recovery within 3 days. And again, not like a recovery back to the July highs, but a pretty decent 10% recovery across a lot of names and 3-4% across the indices means the market thinks earnings growth is strong. Earnings growth is not going away. The consumer, for all the concerns we got from, other companies like Disney, is still pretty healthy. Jobs are still out there. And if people have jobs and Palantir is able to sell their very complex software to grocery chains within 7 days of having a boot camp, then companies are willing to spend money. People are willing to spend money, and earnings growth is going to show that. And so that's why I think retail was really smart on Robinhood for buying the dip on Monday, because a recovery of, if you imagine you bought Palantir at $20 and like you went full port at $20 or Robinhood at 13, right? Like these stocks Palantir is up 45% since then. Even if you sold and took profits, think about a trade, like a generational trade, because I don't know if we're getting Palantir back to $20 again, given now that they reported earnings. So it was a really momentous thing. Palantir 20 obviously was stupid. Like trading at 40 billion, some could argue it was super like fair value. I would argue, given the growth prospects, there is zero real cool premium being attached to the company. And we know the company is very cool. And so if there's no premium being attached to the company, this is obviously not going to stay here. And that is what happened on Monday. So I think the market, when it realized Meta was at 430, Meta's now at 517, it bought the dip. And so I think that reversal within 3 days is very bullish. It's exciting to see that. And I don't think that's going to stop anytime soon. And I think that's going to be, I think that's going to continue to compound in the broader market. So that's one of the things we had in the context of the S&P on Monday and on Thursday in terms of how we saw the reversal. Now, one of the things that's interesting about this reversal is loading up on the Mag 7. So here is the Mag 7. I am actually very skeptical right now of buying any Mag 7 stock besides NVIDIA, because I think NVIDIA is going to crush earnings. But here's why. In Q2 2024, the Magnificent Seven's net income, excluding NVIDIA, rose by 30% year over year, the slowest growth since Q2 of 2023, meaning the rate of growth is the slowest since a year and a half ago. This is down from 51% in Q1 in 2024 and 57% seen in Q4 2023. Again, this is earnings growth. It is estimated that the growth will deaccelerate further to 17% in Q3 2024. Meanwhile, the Magnificent Seven have erased $2.3 trillion in market cap over the last 3 weeks. Large cap tech is losing its shine. This is actually, if anyone's looking for like a bear case from me around the market, because I've been relatively bullish for a majority of the stuff I've talked about today, this is my bear case. My bear case is if the Mag 7, the Amazons, Microsoft, Googles of the world, etc., that had a good earnings this quarter, it wasn't a blow it out of the park earnings. I think NVIDIA will have that earnings, but if the Mag 7 continue to show weaker trajectory of overall conglomerate growth in terms of their earnings, you can make an argument that the Mag 7 might need to have more of a show me versus, just tell me your story in order to justify their multiples. Now, granted, I think they've all had healthy corrections. Microsoft went from 460 to 385. Meta went from 540 to 450. Or I think 440 at one point. The NASDAQ went from 500 to 420. Apple went from 235 to 196. Google went from 190 to 155. All of these guys, Amazon went from 200 to 153. Like all of these guys took a beating, slightly recovered. Meta has had the best recovery so far. Tesla 270 to 198. Although Tesla is really contingent upon this Cybertruck event this Cybercab event in October. So we'll see what happens there. But that's what I'm the most fearful of. Like, here's the bear case scenario playing out in Q3. Let's say it's Q3 time. Markets are fine. S&P's back to where it was, let's say 550. NASDAQ's closing in on 500. And then all the hyperscalers report earnings. And either you could see this is the bear case gets tricky. They could report more CapEx and you could get scared if you're not seeing AI growth. It's like a double bind. If they report more CapEx growth, $15-20 billion on average in Q3, no monetization of any of that CapEx, and their argument's like, hey, we need to be competitive, so we're going to keep spending money. The street's going to be like, all right, we're going to keep waiting until this AI revenue eventually shows up, and that could get people to be hesitant and sell off those stocks. Or B, they stop spending as much on CapEx, and if any one of these mother effers say, well, it's a little bit of weakness in advertising, or Amazon's like, well, people aren't buying this Chinese shit on our platform anymore, then the street's like, oh, so consumers slowing down, and you guys are cutting back on the one thing that we thought you wouldn't cut back on, which is CapEx. Because you told us for the past 7 months that you're going to be spending as much on CapEx as possible because you need to build out your AI data centers. And then Zucks in Q3 could be like, well, we already have 800,000 H100s. We don't really need, we're okay. We don't need that much more. And I think the street immediately thinks like, holy crap, they're not really monetizing AI. The consumer's weakening. And so they're cutting back on costs. And the first place they're cutting back from is this massive AI revolution they told us was going to happen. Why aren't they spending more on CapEx? And then the other side, again, is they're spending too much on CapEx, but there's no growth. So I think there's a very unique double bind. This is what we do in debate, right? It's called a double bind argument where you're screwed either way. It's like either you spend more CapEx, but there's no revenue growth and you're screwed, or you spend less CapEx and you say the consumer's weak. And then the street's like, well, why were you spending so much CapEx in the first place? Why weren't you preparing for this inevitable weakness of the consumer? The way they get out of that is by saying, hey, we're going to keep spending CapEx and we're growing. Like Azure doesn't even slightly miss. Amazon doesn't even slightly miss because they still had slight misses this quarter. That's why they got nuked. If they don't slightly miss and they increase CapEx and the consumer's fine, That's our Goldilocks scenario. Now, here's another scenario. In which Mag 7 can do well. Let's say Mag 7 corrects another 10%. Let's say all the Mag 7 goes down another 10% before Q3 earnings. Then valuations are a lot more reasonable if Meta's at 420 versus at 500, or if Google's at 145 versus 160. And then if they show kind of weakness in CapEx or consumer spend, whatever it may be, the street can overlook it because the PEs aren't like 35 anymore. The PEs are like 23. So I don't know. We're going to see what happens. But that is my bear case. For those that are wondering what is my scary part of Q3, it's really the Mag 7. Because now the growth comps that they're going to have to put up, again, here's the chart, is just a lot. And growth is declining significantly. Now, regardless of that bear case, these are still the names that are going to govern the next decade of not only the stock market, but of technology. And so I think betting against them is obviously stupid, but in the context of maintaining the crazy bull run we've had, I think Q3 is going to be very interesting to show if they can put up the growth. Now, I do think NVIDIA is going to crush. A TSM on Friday reported 44% year-over-year growth in their July month. That's an indication for NVIDIA. SMCI, although SMCI has taken a just like a shit, right? They took a pretty big shit on Friday, falling from, I mean, dude, this thing was $1,200 on March 8th. Now it's $507. They basically fallen 50% since then, and they fell 30% on Wednesday. They still increased guidance. They fell because of their operating margins, which hit a 2-year low at 11%, but they increased guidance by $3 billion, indicating to me that NVIDIA is seeing a shit ton of demand. And Dell also took a crap because Dell doesn't have good operating margins either. So Dell and SMCI have been hurt, but again, they're more in the hardware business and the margins aren't the best. But NVIDIA's demand should not be going anywhere. So I think August 28th, NVIDIA is going to have to save the bull run. Not saying the bull run is gone, but because Mag 7 didn't put up like the best earnings you could imagine, NVIDIA I think will. And if NVIDIA raises guidance and they get closer to that $5 EPS target by 2025, you put a 30 multiple on that, 40 multiple on that, you're looking at a $150 to $200 stock. And I think that's what the street's expecting. So NVIDIA is really going to have to do its thing. Bayra says, must we not forget 6.2 trillion in money market accounts, all-time high? Yeah, so that's another thing. Money market accounts, for those that missed the update, people really panicked on Monday, and I think that's what led to the highest level of money market accounts that we've ever seen. 52 billion added over the past week, 6.19 trillion. Here's my other fear about money market accounts. So let me give you another bearish argument, right? So to combat a lot of the bullishness, let me give you another bearish argument. Let's say rates go down 25 bips, even 50 bips. What you're getting right now is 5.5%. Are you really going to take a lot of money out of your money market funds if it only goes to 4.5%? Like put it in the chat. Would you actually, if you're getting 4.5 versus 5.5%, your whole idea being parked in money markets is to get yield risk-free. If it goes down by 1%, like obviously that's not good, but is it enough for you to be like, man, I got to go find the next, Palantir. I got to go invest in Robinhood. I got to go invest in Tesla to find yield. I think for some part of the market, it will create a catalyst. The jury's still out on if like the majority of people are like, oh, well, I got to go invest somewhere else. Maybe for like corporations that are dealing with a lot of money, they might like, but for the average retail investors, I don't know. I don't know if they're going to get out of their money market funds or they're going to take cash out of their Robinhood that's giving them 4.5 or 4.9% APY and put it into the stock market. So that's another bear case along with Mag 7's earnings growth. Because if both of those don't necessarily correlate to the bullish side of the sentiment that I want to see, then maybe that might not be the best either. That was a pretty occult explanation. Dude, I called it oculate. Like, yeah, I don't know what you want me to say, dude. Like, this is just how I talk. I thought it sounded like oculate, so I said oculate. Amit, what's your take on Nifty? India's top 50. India's growing rapidly. Yeah, I'm bullish India. I'm long India. I'll be in India in October, so I'll get to see how the economy has changed over the past 5 years. I don't think buying the Nifty is a bad idea over the next 10 years. There's also some, it might significantly outperform the S&P. It's just hard for me to imagine that because although India is having rapid growth, the S&P is the best, tech companies in the world. The other thing is Argentina's ETF. I'm forgetting the ticker, but if you just type in Argentina top 100 or Argentina ETF, dude, that thing's up like 100%. Let me see if I can find it. That thing's up 100% for the year, if I'm not wrong. There's a certain one I saw. The global MSCI is up 20%, but there's a couple other individual ones that are up like a lot. And I mean, Argentina now with Milei democratizing capitalism. By the way, what the heck is going on in the United Kingdom, dude? Like what? I mean, the Brits. What's going on, bro? What can someone in the chat who's in the who's in England, who's in Britain, can you tell me like what is going on? Because I mean, some shit's going on, bro. Like, I heard you're not allowed to say certain things on Twitter or they're going to come after you like it's fucking 1984. Is that propaganda that I'm seeing, or is that like legit? It's like very weird what's going on in the UK. But anyway, the overall point is I don't know if money's going to leave money market funds, and I'm long India. I would also think of being long Argentina because they're going to unleash capitalism. So we'll see what happens. Again, I don't want to speak on the UK that much because I really haven't studied it too much, but like from the stuff I'm seeing, it's kind of crazy. And again, I might be totally miseducated. That's why I don't want to like give a definitive take on it, but I don't know, dude. It's very interesting what the hell is going on in the UK. We're getting a lot of different perspectives from a lot of different ideas. And we'll see. We'll see what happens in UK. But I wouldn't go long Europe. That's the one thing I wouldn't go long because like you're just not getting a culture of tech innovation in Europe yet. But in Argentina, India, you're getting them, to want to embrace entrepreneurs and capitalism. So I think those are the sectors that can do really well. Let's listen to Tom Lee from Friday. Some of you guys might have seen this. Some of you guys might have not seen this, but let's get his take on what's going on with the macro economy. And then we'll keep going from there. Long European girls, though, correct. Definitely long European girls. Maybe not long the European economy.
You suggest the worst is behind us. What makes you think that?
Well, I think the thing that we're watching is the VIX spike to 60 on Monday, which is the third highest reading ever, and the VIX futures curve inverted, which was the steepest inversion since the pre-pandemic times. Both are starting to normalize. I think the VIX, as it closes below 20, and it hasn't closed yet, and as that VIX futures term structure uninverts, that tells us the worst of the panic is behind us. I don't think it means we won't have ripple effects because we know there's some trapped bulls and, there's still some nervousness around Iran and how much of this yen carry trade has to unwind. But I think the worst of the selling pressure is behind us.
How do we know that we had just a growth scare and not something more dramatic to come, Tom? Never mind the unwind of the carry trade, and no one really knows whether that's over either. But when you think about those two events, what does it make you think about where we could go moving forward?
Well, I think investors, when it comes to the growth scare side, have something they can check every week, which is weekly jobless claims, because that's what was a positive surprise on Thursday. And a lot of it came from Texas. Texas had a big drop in weekly claims week over week. The fact that markets reacted so positively Thursday to that jobless claims number puts me in the camp that that's one of the big drivers because we had a better than expected claims number and then the market popped. I think the growth scare is what's on investors' minds. And next Thursday, they'll get another weekly claims number. And if that's also equally improving or stable, I think it's going to give people a lot more conviction.
So I kind of agree with Tom Lee there. I mean, I think he's making a broader argument that this was a growth scare, and that's why tech took a correction, which probably was needed. And that's why the broader labor market was brought into question. And once that question kind of resolved itself with the jobless claims we got on Friday, which was a really good number, I kind of think, all right, it was a growth scare, but it's not really a growth scare that's going to last too long. And I think a lot of companies opportunistically took advantage of the consumer sentiment narrative that formed over the course of Monday's carry yen trade unwind. And they put it on the earnings call. Like Disney, Chris was on the market open on Friday. And one of the things he mentioned was that Disney raised prices dramatically at the parks. So they're saying, hey, the consumer is not willing to spend that much, but they're leaving out conveniently that they raise the damn prices. So obviously, if it's already expensive to have a weekend or a week at Disney, you're for a family of four, you're going to see more people say, hey, why are we spending so much money, especially if it's this expensive? Let's find a different way to make our entertainment or our vacation. So I do think some companies, like there's some companies I'm believing, like McDonald's. Other companies I think are very opportunistic in justifying a crappier earnings and blaming it on the consumer. And maybe that's not the case. Again, Nike, Starbucks, Lululemon, we all saw weakness, but then other brands didn't see that weakness. So I think Q3 will be when we get a definitive claim on is the consumer struggling or not. I personally have asked a lot of people, And I'm feeling it as well with prices when you look at, just basic groceries. Like, yeah, things are more expensive and you get more cost conscious. But I don't know if it's to the point where you're like, I'm just not spending anymore, given what we're seeing, what's happening in travel and leisure goods and things of that nature. Spotify went from 17 to $20 this month. Yeah. And I think most people did not cancel their Spotify. And if you see, massive amounts of people cancel their Spotify because they can't afford $20 a month, then we have an issue, right? Because $20 a month should not literally be breaking people, especially if they're using that product every day. As Spotify is a leisure, right? It's music. Like at the end of the day, you can get music without having to pay $20 a month from it. There's so many illegal websites and easy ways to get it, but people want the convenience of music. And if that convenience is something people have to think about paying, that's where you start to get, all right, what's going on, And so I think we'll figure that out over the next quarter. Now, going to Tom Lee's point around kind of what's happening in the macro, take a look at what we saw briefly on the 2-year and the 10-year. So when the yields invert on the 2-year or 10-year, that is a signal that we're heading into a recession. What does that mean? That means the 2-year is giving you more, or is not giving you as much of a yield as or is giving you more of a yield than the 10-year. And theoretically, the 10-year Treasury bond in the United States of America should give you a higher yield than the 2-year bond because you're locking in a premium for taking more time. Well, look at what happened on Friday. The 2-year, this is the 10-year, the 2-year right here is at 4.05%, and the 10-year is at 3.94%. Now, I know the 10-year is still giving you less of a yield than the 2-year, but on Friday, I'm showing this because they're very close. On Friday, there was a moment where they uninverted, where the 10-year was actually giving you a better yield than the 2-year, which is very important. Now, I am very curious this week to see, will the 10-year uninvert again, and you'll get, call it 4.1% from the 10-year and 3.8% from the 2-year. Again, very close to each other, but it's starting to signal a little bit more of a healthy rate environment and a more of an inclination for the Fed to cut rates. Now, I think that uninversion is going to be hard to get unless we get a really good CPI report, but we've basically avoided a recession from that inversion over the past 2 years. And I don't know exactly when they inverted. I think 2022, we had a bit of inversion. So technically we had a recession because we had 2 quarters of negative GDP growth. And the stock market obviously fell 30%. So that was tough, but it wasn't like 2022 wasn't a like the sky is falling recession. If you were an investor, the sky was falling. It was really tough to see Palantir at $6. But most people still had their jobs. I mean, 2022, dude, we were adding so many jobs because that was the COVID recovery. So 2022 was a stock market recession, not a Main Street recession. And 2024, when the yield curves officially inverted and we were supposed to see this massive recession, this is why so many people, saw or thought they were going to get a recession. It ended up not happening. And that's why the Mike Wilsons of the world, all those people felt a little, they felt like a lot of their calls just didn't go that well. Bitcoin right here at 58,000. And the reason their calls didn't go that well is because they called for a recession. That recession fully never came. So it's going to be very interesting to see what happens this week and see how the inversions kind of play out. But that's what we saw on Friday. And now I'm just going to be curious to see where it continues to go. Biden administration redefined recession. Recession never happened. Please report to your nearest re-education center immediately. Yeah, I remember Janet Yellen kind of redefined a recession. But you know what? You know why they kind of got away with redefining recession? Because like the economy itself was like people weren't losing jobs. We were adding massive amounts of jobs. And so I think the Biden administration was able to kind of reconcile the fact that, hey, we don't really have a recession, right? All the leading indicators in the macroeconomic world were like, hey, recession. But the Biden administration was like, people were adding 500,000 jobs a month, which is what we were adding or like 450 in 2022. So they were able to kind of get away from framing that. But if you were in the stock market, you felt a recession. And now the broader question is, do we really get a recession going into 2024 or 2025, given the growth scare we had on Friday? And so I guess we're going to see. We're going to see how this ends up playing out. But those were the main things. Those were the main things that I wanted to speak about from a macroeconomic standpoint. Let's look at earnings that we have next week and kind of talk about predictions for that. So again, we talked about the carry yen trade. If you missed it, hedge funds reduced their exposure to the carry yen trade the highest in like 4 years. If you look right here, so August 6th, this was the lowest amount of bearish yen bets, i.e., short yen bets that we see since 2017. So it's been a long time. I think JP Morgan is right by saying that unwinded. We saw how 2023 is starting to look a lot like 2024 in terms of its overall performance. And if that's the indication, then that means December, we're probably going to see a lot more momentum as the market starts to recover after the election as well. And then finally, the biggest bear case that I talked about in today's show was that if Mag 7 earnings continue to decrease and deaccelerate, next quarter is going to be 17% down from 57% 4 quarters ago, then either CapEx gets hit or CapEx increases, but we don't have any monetization of the CapEx via AI. And that is something the market's really going to have to figure out how to look past on both scenarios. Either they look past the AI monetization not being here yet because they believe in this broader vision. And Zucks even told us on the earnings call, he said, hey, it's going to take like 2-3 years to really monetize AI. Or the market takes down the multiple from these Mag 7 names and says, hey, until you show us AI earnings growth, we're not going to give the multiple. Either way, we're going to have to see how that plays out at the end of November. Okay, cool. So let me show you earnings growth or earnings next week. So this week is August 11th to August 15th. Here are the earnings that we're looking at for tomorrow. So Monday.com, that'll be an important one tomorrow. After the close, we have Rumble. By the way, Rumble, I don't know if you guys have seen their metrics. Rumble is one of the most overvalued companies in like the history of the stock market right now. Rumble's market cap is almost $3 billion. And it's almost $3 billion, and they're doing like $50 million in revenue. Like, and it's not growing. It's negative growing. It's like, it's really bad, dude. So I know this was sort of a meme stock, but maybe they go up just because people buy it. The growth is really bad, and the valuation is horrible as well. So Rumble, I'm not so sure what's going to happen to them. Home Depot, we have big retailers reporting on the 13th. Nubank FinTech will be on the 13th after the bell. Then on the 14th, we have UBS, another bank. Nothing too crazy in the morning. And then after hours, we have Cisco. That'll be the big one. Nothing really too crazy from there. Thursday, we have Walmart, Alibaba, JD.com, and John Deere. So those will be important ones. After the close, we'll have AMAT materials or applied materials. And then on Friday, nothing too crazy. So not going to be a crazy week when it comes to earnings, but it will be some important companies that we have to look at on the retail side. And Walmart will be a big one in terms of the health of the consumer. If Walmart sucks, then yeah, the consumer is also not going to be the best either. But we're going to see. We're going to see how that ends up playing out. All right. I think that's pretty much it. I bet he can't pronounce karate. I can definitely say karate. Okay. You know, I did karate. My sister did karate as well for like 10 years. So I know how to say karate. I wasn't going to say karate. That was if I said karate. See, if I said karate, I would be messing with you guys. But I'm not going to say karate. I could say karate. I'll be messing with you though. I'm not going to say karate. It's karate. Wish this channel kept up with Hims. Look, I like Hims. I don't think Hims is bad. It's an interesting stock. Their growth was phenomenal, absolutely phenomenal on the earnings call. But they got hit because look, I think we went risk off. Same thing with Robinhood, right? When you go risk off, same thing with Bitcoin right now. The market is very uncertain about what's going to happen over the next few months, especially given some of the geopolitical stuff we're facing. We'll see if Iran-Israel turns into anything more serious in the next coming days as well. By the way, Trump's going to be getting interviewed by Elon tomorrow. So I'll be streaming it at 8 p.m. That'll be very exciting. I don't know what they're going to talk about. Trump's coming back to Twitter for the first time in over 3 years. So it'll be a Twitter Spaces. I don't know if it's video. I think it'll just be audio, but we'll stream that. But in general, those uncertainties, along with the fact that the market is starting to price in a Kamala victory over Trump. I mean, you're starting to see in a lot of different polls. Now, look, I still don't know what's going to happen, but if you're starting to see it get more competitive, I think it's pretty obvious the market, leans towards Trump. So if he loses as well, that, there's so many different things that I think is leading us into a risk-off environment. And I wouldn't be surprised if we end, down for the month of August and September, and then finally start to rebound in October and November. And so we will see. We will see how it ends up playing out. A lot of market predictions show two things: a mistake correlation for causation. Yeah, I agree 100%. A lot of the charts I looked at today, a lot of them, they could be correlation versus causation or vice versa. I just think if you want to sum up what the bull case is, rate cut, earnings growth, Santa Claus rally. So typical Santa Claus rally that tends to happen towards the end of the year, pretty much every year, even if it's not a massive rally, along with the rate cut fueling that. I don't know if small caps go to 300 like IWM, like Tom Lee's saying, and then you get the earnings growth to back up a lot of those numbers with the consumer being relatively healthy and unemployment not accelerating to like 4.7, 4.8%. Bear case is Max 7 don't put up the earnings growth. Consumer starts to deteriorate. We did see the highest level of delinquencies on Friday. That number came out that we've seen in 3 years. So people are racking up a lot of credit card debt, which might be the way people are paying for a lot of the shit that they're paying for. But the credit card debt is one thing that is wrapping up. And then earnings growth outside of the Max 7 doesn't justify the momentum in AI that the market's interpreting. And then the rate cuts end up being bearish because we're seeing so much unemployment that you're getting rate cuts into weakness, not strength. That is the bear case for the rest of the year. Pushes S&P probably flat to like 510, 515. The bull case, I think, gets us back to 5,700. I'm more on the side of the bull case. I think it ends up playing out, but we're going to have to see what ends up happening towards the end of the year. All right, that is it for me. Thank you, everybody, for being here. Another Sunday episode. And we'll be back Monday morning, 8:45 a.m., and see what happens. We can't look at any prices because, again, Robinhood doesn't have the overnight flow on. 4 a.m., if you're up at 4 a.m., then you'll see what the pre-markets look like. But tomorrow morning, let's see. This is the first week after the worst week of 2024. I mean, people's portfolios got absolutely wiped out last week. Slight recovery towards the end of the week. But this is going to be the first week after the worst week. So we'll see what ends up happening. All right, cool. That's it for me. Happy Sunday. Thank you for being here. I will be doing lives while in India. Probably not market close, but market open. Market close is going to be tough. It'll be like 3 a.m., but definitely market open. And we'll keep going from there. See you in 12 hours. Yes, see you guys in 12 hours. Thank you, everybody. Have a good one. See you in a bit. Good night.